Welcome back to GoldSeek TV. I'm Peter Spina, the president of GoldSeek.com and SilverSeek.com. It's a real pleasure to have the president and CEO of Fortuna Silver Mines with us today, Jorge Ganoza. Thank you for joining us on GoldSeek today.
Peter, a pleasure to join you and your audience today.
Yes, well, thank you for taking the time and for giving us some insight into the Fortuna story. It's a company that I've been following for almost 15 years, pretty much since the inception, when you were just getting your second mine going in Mexico and in Oaxaca, the San Jose project, which I had the pleasure of visiting some years ago. But the company has transformed tremendously, especially over the last 2-3 some years with the addition of a huge gold mine in Argentina, and then there was a big acquisition of Roxgold. So maybe to start off with a big broad overview, where is the company, how does the company look like today? What is the production profile? And give us a little bit of insight of what we can look forward to in the coming year with the addition of mine number 5, Seguela in the Ivory Coast, which is quite an exciting, not just mine, but potential to expand and grow those high-grade quality ounces.
Like you were saying, it's been quite a journey over the last 15 years, Peter. Today, we are a company with a global footprint established in 2 premier mining regions, the Latin America through the Andean Cordillera all the way up to southern Mexico. So we go from the northern Argentina all the way to northern Mexico with our operations, southern Mexico. And then starting in 2021, with the acquisition of Roxgold, we have a strong foothold in West Africa. We operate 4 mines currently, and as you pointed out, we're expecting to bring our 5th mine into production by mid this year. So in 2022, we delivered 401,000 ounces of gold equivalents. 20% of that production of that equivalency is silver. So about 22% of our revenue comes from silver. So over the years, we have transitioned from a company with a silver contribution to sales of around 60% to around 20% where it sits today. Our gold exposure has grown. For 2023, we already have provided guidance. It's public. We have guided for a 13% increase, roughly, in gold equivalent production compared to last year. So we're looking at around 450,000 ounces of gold equivalent ounces in 2023 at an all-in sustaining cost in the range of $1,350, $1,380 per ounce all-in sustaining, right? So that is a picture of Fortuna. Today we are over 5,000 strong in the workforce, making Fortuna happen every day in 5 countries across 2 continents. And it's been quite a journey.
And the journey into West Africa began almost, I guess, about 2 years ago with the acquisition of Roxgold. You are currently in West Africa. What was the attraction of moving to this part of the world? What is the activity? I know a lot of investors may know some of the large gold miners out there in Ghana and Mali and that region. But if you give us a little better perspective of West Africa and what's going on there right now.
My initial interest in West Africa started back in 2014, 2015. And I'll tell you a small story. I did a ranking back then in 2014 of the highest grade undeveloped gold deposits in the world. And, I got a long list of, actually it wasn't that long, but I got a list of those highest grade undeveloped gold deposits in the world. There were assets in Russia, China, Colombia, Ireland, and West Africa. I cleaned out of the list the projects in jurisdiction where we just wouldn't go, like China, Russia. So the top three projects were in the Ivory Coast, sorry, in Burkina Faso, in Ireland, and in Colombia. And I set out to get to know the three projects. No, so I approached management. I got familiar with the assets, with the jurisdictions, and that's how I first came in contact with Roxgold. Out of the three assets, the one we liked the most was Roxgold's Yaramoko mine in Burkina Faso. And that's when I first met them. I like the team, I like the property, I like the region. Some of your audience might not know that if we draw a contour around the gold producing regions in West Africa, let's say Ghana, Burkina Faso, the Ivory Coast, the gold producing region of Mali, because Mali is a large country, but all of the gold is produced in southwestern Mali. So if we draw a contour there, including Guinea, Senegal, that surface area is roughly the size of the state of Texas. And that small area, the size of the state of Texas, is the largest gold producing region in the world. That region produces more gold than continental sized nations like China, Russia, Australia, Canada, or the continental US, right? So if you want to be a force in precious metals, a force in gold, you have to be there. There is no other region in the world that exhibits the kind of growth in resources and in production, in annual production, that West Africa as a region exhibits, and such a small surface area.
And that's interesting to understand and know, because I think when the merger was announced, with Roxgold, the investors, a lot of them didn't seem to really understand why you were moving into West Africa. It was a bit confusing. Some were upset. Some were, just didn't really understand it. But now I think it's starting.
I think there were, like, as you were pointing, Peter, some legitimate questions and concerns regarding, or expansion into West Africa. To begin with, to some of our investors, West Africa just sounded like a very foreign place, right? And if we are talking about mining, there is no better place to be, particularly in an environment like we're today, than West Africa. Having said that, for me, and it's part of our philosophy, mining has always been a frontier business, right? So you have to go where the gold is. And West Africa might be foreign to some, but from the perspective of mining, it's a well-established mining jurisdiction, and we can elaborate more on that. And the other one is there were some legitimate questions from the part of our investors and concerns with our ability to incorporate a West African business. Fortuna had been known for exceeding and meeting and exceeding expectations with respect to its operations and growth in Latin America. And I think a lot of our investors were expecting more growth in Latin America. And it did come as a surprise, even though we had been telegraphing that we were looking at other regions, that we did the acquisition. But you know what? We have proved the acquisition, the integration worked. We have delivered the ounces, we have delivered the costs, and we're delivering Seguela, a construction project, in this challenging inflationary environment with strain on supply chain, on time, on budget.
Okay, so Seguela, this is a very interesting project. You're months away from producing your first gold ounces from there. It's a project that continues, to step closer to production, but also grow in size. The area is comprised currently of your reserves and measured and indicated and inferred ounces of just over 1 million ounces. but that's coming from 5 of the 6 deposits that you're working on right now. One of them is the Sunbird project deposit, which appears to be actually the largest of these 6. It's not incorporated in the current mine plan. So if you could give us a little bit overview of what's happening there, and just the general it was 30 kilometers of property and trend that you're looking to explore on.
The driver for the acquisition of Roxgold was our conviction that Seguela holds potential that is far greater than what we can exhibit today in a technical report. No? So to begin with, we have a commanding land position that stretches for 30 kilometers, undivided, 30 kilometers from north end of the property to the south end of the property, where we control all the ground and all the structures that host mineralization in those Birimian greenstone rocks that are so productive in the region. Within that, we currently have 5 mineral deposits in the reserve. We have Antena, Hula, Aguti, Boulder, and Ancien. Those 5 deposits are in the mineral reserves as presented in our technical report that's available to the public. Since then, we made an a discovery. It's called Sunbird, as you pointed out. Sunbird has gone over the last 18, 20 months from 0 resources, just a few discovery holes, to 500,000 ounces in inferred resources at a grade of around 3.7 grams.
Wow.
And 280,000 ounces, additional 280,000 ounces in measured and indicated at a grade of 2.6, 2.7 grams per ton gold. Let me remind you that the average grade of open pits in West Africa is about 1.2, 1.5 grams of gold per metric ton. So Seguela, average grade of reserves is around 2.8, 2.6 grams.
Wow.
So it's a high grade deposit that continues to grow, and we're very excited about it.
Sure. Not all ounces are created equal, and this mine, this project, is really growing in size. So you're constructing a large mill, and the idea is to start these various open pit mines and feed it into a central mill. Is that correct?
Yes.
And the current mine life is going to exceed now, I guess, the 10-year mark. I guess there's so many different areas to focus on and develop and explore. So what is the plan then as you get into production? You're going to continue to focus on the current deposits, and I know that there's some of them are below the conceptual open pits. They're at depth too, so there's potential even to go underground. Or
Seguela is a flagship property for the company, and it's a story that will continue to evolve over time. No, it's anything but static. Why? Because the resource, as we have shown, will continue to grow. And we have other opportunities through optimization of mine plans. As you just pointed out as well, we have not done the trade-offs on underground mining. We have mineralization below pit limits at the 5 pits we currently have in the mine plan, and we can already envision the same issues at Sunbird. So we have a strong case to extend mineralization in the reserves through underground mining beyond pit limits, because mineralization remains open at depth. So it's going to be an evolving story. For us, the task is clear. We are going to start commissioning activities. We're 95, 96% complete with construction as we speak. This is a construction project that we launched in September 2021. And by now we're 95, 96% complete with construction. We are going to start sending ore to the crusher as part of dry commissioning first week of April.
okay.
And we expect first gold to come relatively soon after that. Hopefully May, June, we should start seeing first gold. So we have guided for 2023, 60 to 70,000 ounces of gold being produced at Seguela in this initial startup. It will only contribute for about 6 months of production in the year, but those 60 or 70,000 ounces of gold will come at an all-in sustaining cost under $1,000 per ounce. No?
So that's very strong cash flow. So the production profile is when it's at full production capacity is looking more towards like 130,000, 100 to 50.
It's in the range of 120 to 150,000 ounces, depending on the year and the sequencing of the mine. Mm-hmm. We currently have reserves for close to 10 years, but that is not inclusive of Sunbird, which, as we just discussed, between both categories comes with 750,000 ounces, which and mineralization remains open, and we continue drilling. So there is right in front of us, the work is get the mine into production by mid-year, start producing gold, then stabilize production in those initial 6 months, right? Of production, which is the second half of this year. Test the system to nominal capacity and stress it beyond. So as we go into 2024, we, through the first half of 2024, developed the case for the expansion. To me, there is no doubt there will be an expansion. The question is how large.
Okay. And
is it a debottlenecking of existing infrastructure, or we need to add another mill, add tanks for carbon in leach? Well, I mean, we need to figure that out, but everything starts with the mine. So concurrent with all of this work, we continue drilling aggressively. Our exploration budget in 2022 was $30 million, of which 12 million were allocated to Seguela. For 2023, our exploration budget, or global exploration budget, is around $27 million, of which 10 million are allocated to Seguela. This is where we have today our highest value opportunities.
That's where you can add the most value for shareholders. That's excellent. Now, if we were to look into 2024 and onwards, you're going to start producing some really heavy positive free cash flow from the company. What would you like to do with that? Where is the company, I guess, financially now? You have some revolving credit lines. How do you look at the coming years? And is there a point where you may start issuing, say, dividends, or what kind of...
The capital allocation for the company is clear. With Seguela in production, the first thing is to bring down our debt level. We are not a highly leveraged company. Our debt to EBITDA is around 0.5, 0.6 today. So, compared to our EBITDA, we have very manageable debt. But we believe a mining company needs to be managed with a fortress balance sheet, and that means bringing down debt. So that will be the first priority. With respect to providing returns to our shareholders, we already started that process this past year. The board approved a share buyback program. Now, I have to say that we've been executing on the share buyback, but very timidly. Very timidly. Why? Because we're still in a capital intensive phase with the construction of the mine, right? So we are prioritizing, capital allocation towards growth at Seguela, and maintaining a balance sheet that's strong still, or a liquidity position that is strong. So finishing this capital intensive phase, we start reducing our debt levels. We will always carry some level of structural debt, call it, 100 million, 150 million for a company of our size. We generate sales of $750 million a year. Carrying $150 million in debt in the balance sheet is very conservative for a company like us. And then either being paying a special dividend, a dividend, or continue with the share buyback program in an opportunistic way. Those are the things that we should be looking.
Excellent. You have, I think, investors who agree with what you had just said, that the board also sees that the share price isn't being fully properly valued in the marketplace. So you instituted, this share buyback to support it. Do you think some of that's going to start changing now as you bring the mine onto production in the Ivory Coast? You'll get a share re-rating from the analysts, or as you start to start to cash flow more from another new mine and reduce debt. Is that upcoming?
That's certainly an expectation. No, we expect that as we deliver Seguela in production, we're going to start seeing the re-rating. So far there is nothing that suggests that we're not going to meet our milestones and targets for that. Mm-hmm. So I've been in the mining industry since the late 80s, and I think this is one of the worst equity markets for mining equities markets I've seen. I mean, in 2000 it was a bad market.
Yeah.
For mining equities, but the underlying commodities were at $250, $300 gold, $3 or under $3 silver for a little while. But I see a very difficult market for mining equities.
I agree. Is that something? Why do you think that's the case right now? Because it is something that I mean, you seem to be undervalued relative to some peers, but the peers themselves, the whole industry, seems to be quite undervalued. Why aren't the investors coming in? Are they chasing other markets or?
Yeah, the way I view it is investors have been distracted by other asset classes. There is this whole thematic around first Bitcoin and cryptocurrencies, then the green energy revolution, the critical minerals, the electric vehicles story, and I think just capital has been flowing to that, and seeking returns, because all those asset classes have, we've seen bubbles in cryptocurrencies and all of that, and people just seeking returns. Now, that might sound a bit contradictory, because usually you seek gold to preserve value, not to seek returns, right? But I believe there is a big consideration there. Investors just being distracted, and with respect to Fortuna, we have built a company that can perform throughout the precious metals price cycles, and we try to do something that's very difficult in this business, Peter, is make long-term decisions.
Yes.
That's very difficult in this business, and sometimes it's not gratifying at all in the short term.
Yes.
But we have put together a company that can perform throughout the precious metals price cycle. Fortuna has been added to its portfolio assets with long lives. You've been part of the story since the very beginning, and you know that our asset base has shifted significantly. We started with underground mines on epithermal deposits, which traditionally ran on very short life of mines. Now, those mines can operate for 500 years, like the Cayoma mine in Peru, but usually showing no more than 3 or 4 years on reserves.
Yeah.
So it's very difficult to get the generalist investor into the story, because they don't know how to value the geologic potential, right? Yeah. So it is something that we, as companies grow, they have to do is shift to an asset base where you can show longer life of reserves. That's a different type of asset than the ones where you build a small mine, high grade, with short life of reserves, where it's always a leap of faith that you will continue operating for another year and another year. So that's how Fortuna started with the Cayoma mine, no?
Yes.
And that was 15 years ago. But today we have a portfolio of 5 assets, and 3 out of the 5 have reserve lives or can comfortably project life of mine, including reserves and conservative assumptions on resources, for over a decade.
Mm-hmm.
No?
And you've been developing, as you said here. I really started following Fortuna even more closely as you moved into Oaxaca, into Mexico, and watching the San Jose mine, and making these investments during the difficult markets periods, and showing that you can still make money in the with the right assets, so that you can survive the downturns. And you're not someone who wants to just buy ounces and grow ounces, but you're looking to make a sustainable mining company here.
And we all subscribe to the idea of higher prices. I sometimes joke with people who, with newsletter writers, or because newsletter writers and other market, participants love to ask mining executives what do they think about the gold price or the silver price. And I think that's the worst person you can have. They're always going to be bullish. We're always going to be bullish on higher prices. Right? Now, having said that, I am personally bullish on higher prices. But when I look at the company, I leave that personal opinion on the side, because what we're trying to do here is build a company that can perform throughout the precious metals price cycle. Mining companies need to be able to perform in a higher price environment and in a low price environment. And when you do that, you also need to have the stomach to build mines when it's unpopular, when prices are down, because that's the best time to buy assets and the best time to build mines. No, not Absolutely. When everybody wants to build a mine. This is an industry full of bottlenecks. There is not enough people. There is not enough manufacturing capacity with equipment suppliers. So when everybody wants to build a mine, is when we start running into trouble. That's when we start seeing delays, budget overruns. So what's sensible to do is to acquire assets when prices are down and develop them when prices are down, as you prepare for when the cycle changes, right? And that requires a lot of discipline, and sometimes becoming unpopular with investors for the short term. Us building Lindero and building Seguela, I have to say that has not been very popular with some. But now we're done, we're set, and waiting for those higher prices that we believe will come, right?
Sure. Yeah, I think with Lindero, it'd be nice to also get an update, because that was nice gold. It's a nice gold asset, nice gold mine that it took a little longer to get it to its full production capacity with some of the costs down there in Argentina. But you're in a very friendly mining jurisdiction there. How does that mine producing now, and how do you look at the coming years with the production profile?
Right before we started with the interview, we were talking about COVID in March 2020 when it all started. And the Lindero mine in Argentina, we were 90% complete with construction in March of 2020 when COVID set in. So Argentina, along with a couple other countries, implemented one of the most brutal lockdowns in the world. No? So basically, we were left in a bubble without being able to bring personnel in, and whoever left could not come back. So we had to gather our construction supervision and say, guys, we need you to stay. But if you stay, you're going to stay here until the very end. It might be a year before you can go home. Because if you leave now, you will not be able to come back. So
Yeah.
we need you guys to stay and finish the construction.
Mm-hmm.
And you know, out of a team of 16, 17 supervisors, only 2 left.
Wow.
You know, I'm so grateful. And people don't fully recognize the effort that went there. And so we finished the construction, the commissioning, and the ramp up with the same 17 guys on the leadership squad. It was remarkable. Now, it took a toll. No, there is no free lunch. Of course, it took longer. The ounces we guided in 2021, we just couldn't get them. No, so it was torturous. It was difficult, but we did it, and it took a bit longer, but we did it right. The mine is operating. In 2022, the Lindero mine delivered 118,000 ounces of gold at an all-in sustaining cost of $1,150, well below the median. You know what's the cost for 50% of global mine supply today?
1,500 maybe.
Yeah, 1,400.
Yeah.
$1,380, $1,400. 50% of global gold mine supply is produced at an all-in sustaining cost close to $1,400 per ounce. Yeah. So that used to be $1,100 just a few years back, 4 years ago. $1,100. Today, cost inflation and declining rates and all of that's just driven cost upward. And Lindero produced gold in 2022 at $1,150, $1,180. So very competitive.
Doing very well. It's bringing some nice cash flow now into the company.
Absolutely.
Doing well. Also, I guess it'd be good to also touch on San Jose because it's a very nice project that has produced some really good cash flow for you in the past. I guess the overhang has been this issue with the government there, with the environmental permit. Is there a little more certainty with where that's at now, or what is the state of that?
Yeah, as a way of background, San Jose has been a tremendous asset for the company, a tremendous mine and cash flow generator for a decade.
Yes, it's been very low cost, all-in sustaining costs, gold and silver.
Operating steadily and growing, because always we've been expanding production at that mine for over a decade. It's been a tremendous free cash flow generator, and for this past decade, a flagship asset for the company. That Batun is going to be transferred to Seguela this year, but certainly a company maker for us. Now, under the current Mexican administration, we've been having challenges with the environmental agency in Mexico, with the Federal Environmental Agency, the acronym for which is Semarnat. Semarnat has challenged our permits with really no grounds. And as an outcome, we have prevailed in court, but they continue coming at us, even in spite of the fact that we have prevailed in court. The drama here is that we have a 12-year permit that they granted to us only in December 2021. In December 2021, they granted us an extension or a renewal of our original 12-year permit. Getting that extension was difficult enough with them, but they granted it to us. And then they came back to us saying, you know what, I made a typographical error, which is childish. Yeah. And it's not 12 years, your permit is only for 2. So we took that to court in Mexico, and we prevailed in court. We received a ruling in our favor in November of 2022, in November of last year. So with that, we said, well, this issue is set and done. And now, in January 2023, they have come back to us, the same federal agency, the environmental agency, comes back to us and says, you know what? That permit that I gave you in 2021, that extension of 12 years, it was illegal. I could only give you half of the term, so 6 years. So I'm taking the permit to reissue a 6-year permit. So they leave us in the process without a permit. So we said that is illegal. You cannot do that. And we have taken them to court again. And we're in court. The court has accepted, or the nullity trial, that's how it's called, a nullity trial. So the court has accepted the nullity trial. The court has issued in favor of the company an injunction that protects the integrity of the 12-year permit. And we expect this issue will get resolved over the coming year to 2 years, because that's how long it takes. We know that under the López Obrador administration, Mexico has become unpredictable for business. And I'm not shy to say it. Really unpredictable. It's not just the mining industry, but across all industries. Very difficult, very difficult.
That's
very sad, because Mexico is a country with a long and proud mining tradition. And we have currently on the environmental agency in Mexico, anti-mining activists promoting all of this.
It's very unfortunate. And having visited this project, San Jose, I think it's important. I don't think a lot of investors or just people in general realize that a lot of these mines are built in communities that don't have many opportunities, that you come in and provide a new opportunity for the community, for the region, jobs, investing in the community, bringing them these opportunities, and it gets in general, just mining, especially with the younger generation, they just don't understand these benefits. They're very they want all the metals from mining, but they're very anti-mining, which I understand.
I'll share with you two things that I'm very proud of, particularly at this mine. The first one is that we source our water from sewage. We don't tap into any aquifer or into any open body of water. We source our water from rainfall that we capture in a reservoir and sewage. There is a town located 13 kilometers away from the mine. It's the town of Ocotlan. And when we got there in 2009, 2008, and we were assessing the project, we identified that Ocotlan had an abandoned sewage plant. So the raw sewage came into the plant, and without any treatment, it rushed out into the Atoyac River, polluting it without any treatment. Raw sewage straight to the river. The Atoyac River is a sewage, right? So we said there is an opportunity here. It's a win-win opportunity. We will do an agreement with the community, with the municipality. We will revamp the plant at our own cost. In exchange for that, we will operate the plant also at our own cost. So we invest capital, we operate the plant in exchange for a percentage of the water, right? So we invested close to $1 million. We operate the mine, the sewage plant, we operate it. And we pump the treated sewage 13 kilometers to the mine, and that is our source of makeup water at the San Jose. And it's a great project. It's a win-win with the community, with the environment, with the neighbors. And, we have a clever source of water. We do not compete with our neighbors for water. And the other one I'm very proud of at this mine is that in 2016, we implemented filtering and dry stacking of tailings, which is the golden standard for tailings management. Not many mines in Mexico nor in the world operate with filtered tailings. No, not many mines. So this is one of those that operates with what's the golden standard for tailings management.
I also noticed that you engage the local community a lot to support local businesses and entrepreneurs there. So you're providing jobs directly at the mine, but also the community supporting the services and so on. It's got a pretty large impact.
I find it funny because some guys in, I don't know where, New York, Geneva, London, whatever, came up with this ESG idea of the world some time ago. We in mining been doing that for generations. Don't call it whatever you want, but we've been doing it for generations and we're proud of it. We touch people every day. It's not, and it's not just by giving them a job. No, we cannot, we enable ourselves, enact ourselves as partners, as neighbors in every community. There is no other way to do business. You have to become part of the community. You have to be a neighbor. We strive to understand what's the view of the future for that community, and how can we be a strategic partner to them on infrastructure, education, health, sustainable development, infrastructure, as I said. So it's not that we are trying to supplement the role of the government, but as good neighbors in places that are so underprivileged and behind the curve on social investment, we have a moral responsibility. And this did not start with this ESG stuff.
Right.
It started decades ago, right?
Yeah.
So we have a strong, mature programs at every site, not just at San Jose, everywhere, where we work on the access of education, providing scholarships, helping bring internet technology to the classrooms, health, infrastructure, sustainable development. We do work on those, and we've been doing that for years. No?
Yes.
Now, perhaps now you can see it in a nice report that, according to a standard that everybody, makes it homogeneous for some guy in a cubicle to read it and rate it. But we've been doing that for a long time.
It's part of your culture. And, you talked about mining and generational mining. Your background is your family's background is in mining. You're fourth or fifth generation in the mining industry. If you give us a little bit of background of what brought you in, I guess, your background in mining. And
Yeah. I'm fourth generation.
Okay.
And I have 4 daughters, and 2 of them are keen to study geology. So fantastic. Perhaps we'll go into the 5th generation. My great-grandfather was a mining engineer and a mining entrepreneur. My grandfather was a mining entrepreneur. My father was a mining entrepreneur. And we are 4 brothers, and 3 out of the 4 are in the mining industry. And as I just said, 2 of my daughters are seriously considering a career in the industry. So I'm very happy about that. So for me, mining is more like a trade, that's passed on from generation to generation.
Oh, that's fantastic.
And I am passionate about the opportunity to unlock the value of resources buried in the earth for the greater good of society, because that's at the end of the day what it's all about. Unlocking the value that's buried in the earth, doing good to nobody, and extracting it responsibly
at least
for the greater good of
have
society.
Continue on with this tradition.
And I'm just
you
passionate
encourage
about that.
other young students and young people into this industry? It seems like there's a big lack of interest from younger generations in geology, in mining. Does that create an opportunity for those who would like to get into this industry?
Yes. Now, you have to be cognizant that you must be willing to spend a fair amount of your time away from home in the field. Yes. Now, you have to be cognizant that you must be willing to spend a fair amount of your time away from home in the field. And you need to have an appreciation and a love for that, right? You cannot go to the field and count the days as if you were doing time, right? So, but I love it. It's so mining as a whole is just so it's complex. It always keeps you thinking, and you need mining skills, geological skills, metallurgical skills, administration skills, human resources skills. Certainly be sensible to social aspects and be smart about it. And you have the opportunity to travel to far and away places and meet, people from all walks of life.
Yes.
You can be in a boardroom in New York City or in Zurich, and you can be, as I'm going to be over
That
the
is very
coming
exciting.
days
I find the opportunity to
in
travel
remote
as one of
inland
the greatest
in
benefits
the Ivory
and
Coast,
ways to
looking at the
see the
construction
world
of a
and to
mine.
really
So it's
connect
exciting. I
with
love it.
different parts of the world. You really find minds in remote locations, so you get to connect with communities that really would never have that opportunity to.
And it's humbling, very humbling.
Mhm.
I feel privileged for sure.
It is. Well, on that note, I just kind of want to conclude here. Your
And it's
monthly
humbling,
production here at
very
Seguela,
humbling,
you
very
have
feel
an
privileged for
excellent
sure.
social media and on their website ways to follow the construction updates. You provide a lot of insights and videos and photographs and keeping investors up to date on Fortuna Silver Mines website. I what other ways can investors connect with you and keep up to date on what's going on with Fortuna?
Well, like you pointed out, we keep a very updated photo gallery in the website, and we produce. Oh, like you pointed out, we keep a very updated photo gallery in the website, and we produce uh, videos that help communicate the business. And you can also access them in the website. But the construction journey, certainly the photo gallery. We Carlos Baca, our investor relations guy, the director, does a very good job
Excellent.
in
Yes, we're
keeping that
looking really forward
updated.
to the first
And
gold pour here, Seguela. Looking
Yeah, I
forward
would
to your
encourage you
earnings
to visit
update
that
coming
and
soon and
keep
to
tuned with
further
our
the other
progress, right?
exploration work that you're doing on the various projects. We'll have to follow up here in the coming months with an update. Fortuna Silver is, for those who follow me, know it's my largest position. So am quite active and interested in following the story. I think what really got me to increase my position in the last year or so was the acquisition of Rox Gold. Even though it was misunderstood by the market, it provided an opportunity to buy, accumulate on a pretty large pullback. I think the market is starting to finally come around and realize what's going on and the value, the discount. I find with just you're trading around $1 billion market cap and you're going to be producing some tremendous cash flow. And when you look at your peers, the relative valuations is quite appealing. And again, as we talked about before, the whole sector is being discounted right now. I think that's a temporary thing. The gold market is finding its floor here, so I believe the market will get going in the coming year. And once the investors see that there's not too many opportunities to growth opportunities out there, the gold and silver, precious metals, commodities sector is going to get a lot more interesting again and bring in some new capital. So I think the timing here for Fortuna is really exciting. And even if the metals prices do hold around here, I think you made some great points that you are able to produce some very good numbers because you are producing below the industry average costs. You are growing the company, and you're growing them with high quality ounces here. So I really congratulate you on the last years and moving this company to the next level. This is 5 mines now in 5 different countries. It's quite exciting to see the company grow from the last 10, 15 years when I started following and investing in the company. So thank you very much, Jorge, for your time. It's been wonderful to get some insights into the company, and good luck out in the field, and looking forward to some updates in the near future.
Thank you, Peter, once again for the opportunity to speak to you and your audience. I appreciate it. Thank you very much.
Thank you.
Thank you, Peter, once again for the opportunity to speak to you and your audience. I appreciate it. Thank you very much.
Thank you.